Buying low, selling high. Riding the wave, I'm here to stay. Living in the digital age. No banks, no fees, just decentralized. It's crypto paradise. Ooh. No banks, no fees.
Alrighty, let's kick this thing off. Good morning from Paradise Surfers. We have the entire surf crew here today. It is Monday, November 17th. The markets are looking red, bloodied. We're beaten down. This has been a tough past month, but we're going to survive this like we survive all the other dumps. I promise you that, folks. We got a lot of great stories to cover today. Japan stimulus incoming. What is the Fed going to do on December 10th? We have a lot of data coming out between now and then. Whether rate cuts are coming, that's very, very important. We'll cover that topic. Michael Saylor's buying. Whale's still selling, though. OGs. Thanks, OGs. Thank you, guys. Trying to make the 4-year cycle thing, I guess. So we got a lot of good stories to cover for you today. We'll get in the charts. Keep the hopium up, folks. That's why you're here. That's why you tune into Crypto Paradise. We are long-term in these markets. We've been here for 8 years in the trenches. The way you survive that long is by holding, folks, and staying locked in. So we are here. First of all, how was everybody's weekend? Did anyone catch that game last night? Philadelphia Eagles looking like they, defense at least, poised to win another championship. What say you, Nick?
I fell asleep during the Philadelphia game, but I did see the Broncos versus Chiefs game. That was another nail-biter, and the Broncos got the win on that one. So maybe we'll finally see a new guard. I know you still want the Eagles to win, and they're kind of still the fresh guard because it's been, the Chiefs or the Eagles pretty much every year lately. But maybe we'll see a new guard. The Denver Broncos with their defense kind of getting some wins. And, yeah, I did see the stats this morning. Big win. So I was busy this weekend. We did a lot of father-son stuff, new Pokemon set. So I didn't do any NFL betting, which means that I also didn't watch near as much because apparently I need that dopamine rush or that incentive to even turn on the football game here.
Well, I'll tell you what. The Rams are looking good. Broncos are looking good. Bills will be there probably at the end, too, in the AFC playoff picture. But that Eagles defense, man, they held Green Bay to 7 points. And then they hold the vaunted Lions offense that scores like 30 points a game, gains 500 yards a game, hold them to 9 points. So, I mean, I know the offense is looking shaky, but that defense, baby. So, enough NFL talk, but it's good. Look, it's good to get distracted by some sports, by some Pokemon. I took a little hike this weekend. Nate, what'd you do this weekend? Were you obsessing over the charts, or were you touching grass?
No, I got some work in on Saturday, and then went out, had dinner Saturday night, had a few drinks. Sunday played some pickleball, went to church, had some dinner with some friends. Just took a chill this weekend.
Pickleball's popular even in Vietnam, huh?
It's like wildly popular here, bro. They have
all
every
those,
square inch of
the lack of athleticism flocks towards pickleball, huh?
It's been turned into every square unused square inch of the city's been turned into a pickleball court. You can't go a block without seeing one.
I gotta get into pickleball, but Nate, I do have a question for you. So while you were at church, I need to know: were you praying to the Bitcoin gods for a bounce here? Because if you weren't, I'm blaming this on you, man.
We were sending up prayers to the good Almighty for a turnaround in 2026 for sure.
Are we just like abandoning 25 here? Maybe we can pull up a chart. We can get some charts. Are we abandoning 2025 and saying, hey, this was a wonky, the 4-year cycle's done. This year was wonky. Institutions coming in, OGs selling out. We're not really going parabolic clearly. Have we resigned ourselves to that, or are we saying, hey, we could actually bounce here at the end of 26? But man, October, November, not looking great.
Not looking great.
I've seen a lot of people talking about there's only been a few times where the fear and greed indicator have gone. I don't know if you call it this low or this high into fear, whatever. This fearful. We're down in the teens now. I've seen people posting about 10, but I don't know where they got that. Both Binance and CoinMarketCap have only shown down to like 17. But anyways, there's some good charts out there showing that whenever it's gotten down this low, I saw one today. I can't remember if I have the story up here or not, but it's like price within 1 week up like 1%, price within 1 month up like 10%, price within 6 months up, whatever, every single time. But so that makes you want to be bullish between now and the end of the year, but I don't know, man. 52% of people think we're not getting a rate cut in December now. If that happens, we're boned for a bit.
Yeah, I'll let you show that chart here in a second, but we do see that the average return for November since the history of Bitcoin is 41%. We're currently negative 13, and the average return for December since inception is 4.75%. So we'll see what happens. There's still time here. We're only halfway through November. We're not even to that 80-day lag to gold just yet. That happens, I would have to pull it up on the chart, but like November 20-something. So you still have a little bit of time here, but yeah, I mean, it's going to be tough. You did have Thomas Lee on Friday, I believe, still go on and say that, yes, the liquidation crisis slowed things down. That may take months to resolve, but he's still looking for a potential $200,000 Bitcoin by the end of the year and a potential $7,000 ETH by the end of the year, which may seem a little crazy, but that's about a 50% gain for Bitcoin, and that's, I guess now it's like a 100% gain for Bitcoin, and that would be about a 100% gain for ETH as well. That could be pretty wild. I don't know if we see that by the end of the year, Thomas Lee, but if we are right in the extending of this cycle, and there is no 4-year halving cycle, there's a 5-year cycle, then obviously there's plenty of time for that to happen. But when you're looking at historical data, whether you're looking at bullish, bearish years, it doesn't matter. The averages are the averages, and we are way below these averages. We did fall way below the average in October as well, which is 19.92%, and we had the first red October for almost a decade.
The more
Let's
I
just
think
get
about
a November 2013, and we'll be good to go for the cycle.
Yeah, right, yeah. Things have changed, I think, pretty dramatically since 2013, wouldn't you say? But the more I think about the seasonality averages and things like that, the more I think it's just pure coincidence. My guess is if you drilled down into every one of those years, there was fundamental reasons why they went up or down. It wasn't just, oh, well, it's November, so therefore price always goes up in November. It's Fed, it's liquidity, it's catalysts or lack thereof. And right now I'm looking at this moment in time, and I just don't see how we get to those heady $200,000 prices at the end of this year. 26, sure. I think there's enough coming in 26 for something like that to happen because the slow grind up to continue. But by the end of the year, I don't think it's realistic. You have to look ahead a little bit. So we have, this rate cut coming on the 10th. The interesting thing about the 52% is that now means it is not priced in. The rate cut's not really priced in, I would argue. I mean, if you look at the charts, and you look at the sentiment, you look at everything, it's pretty easy to come to that conclusion. And so if it does happen, then you would expect to see some bounce from that. The end of QT, right? They need to stop selling their holdings, the Fed, that is, and let these markets breathe a little bit. And then when does the QE start? So this is what it really comes all down to, folks. It's just liquidity, business cycle, what the Fed is up to. And we're at the end of the tightening, end of the 2 years of them basically pulling the rug out from under us with all their shenanigans and selling all their assets. So I guess I'm not surprised to see the market as weak as it has, as tough as that is based on the seasonality. But I'm just not buying in the seasonality stuff anymore. I think it's more Fed-based, it's more macro-based than dates or previous price performance. That's my take.
We've seen a little bit of a rally today, so I don't know if this is exactly true anymore as it was 16 hours ago. But Bitcoin officially gave back all of its gains from 2025, and I asked myself the question: if that was the FOMO blow off top all-time high for this cycle of Bitcoin, has there ever been a case where then it literally had 0% gains for that year? No, it's never happened. So that's another data point on why I don't think the Bitcoin top is in, why I don't think the Bitcoin cycle is in. This would be near unheard of for Bitcoin in the cycle, but also for all this institutional demand, everything that's going on, for this to be the end, for you to give up all of the gains for the year would be wild. And to parse on that even more before you guys jump in with your thoughts, the bull market peak indicators that have hit at an alarming rate over all the previous cycles, still out of all 30 of them that have called peaks in the past, not a single one is even close to saying that the top is in for Bitcoin, and the indicators are telling you a 100% hodl rate for your Bitcoin, and the progress is only 46.74% for any of these indicators. So, I mean, could the top be in? This will be the most wonky 4-year cycle ever, the wonkiest top for Bitcoin, which is supposed to have the biggest and baddest bull market in its history. Yes, I know it's gone from 15,000 to 125, but that was over the course of a couple of years, and we never really had FOMO when it came to retail demand or any altcoins for that matter.
Yeah, I mean, you're seeing a sell-off here, I think, for a few reasons. One, we've talked about this ad nauseum, but it's the OG whales. They're selling billions, right? They're great rotation from the OGs to the Wall Street guys. But then I think it's being exacerbated by the 4-year cyclists. There is, I believe, half at least of the market who still believes in the 4-year cycle. They believe in seasonality. They believe in dates. I had this discussion with a friend of mine who literally just sold out all his crypto. He sold all his Bitcoin, all his Ethereum, just this week or month or whatever recently, because he believes in the 4-year cycle. And so because of that and the OGs, and I think just sort of a lack of catalysts, at least over the last few weeks here, and questions around whether the Fed is really going to start easing and really cut the rates, you're having a prolonged sell-off on Bitcoin. But I just keep going back to this. First of all, we've had how many now of 20 to 25% corrections this bull run? At least 3, if not 5 or 6. Right? It's always rebounded. Secondly, if you go back through Bitcoin's history, and I just think back through my own hodling history, there was ample time, probably 100 or more times where the market shit the bed, everything looked hopeless. I could have sold at a loss or a minor gain, but I chose to hold. And now I'm financially free because of that decision. So, not financial advice. You guys want to believe in 4-year cycle, you want to get out of the markets, try to buy back in lower, that is your choice, and you may be right on it. But I'm going to continue to hold because that's worked for me every single other time, and it's allowed me to be basically financially free sitting here talking to you guys today. So, I don't know, do with it what you will, but I think this is a standard par for the course correction within a bull market. You have enough catalysts coming, and I think 2026 is going to be a blow off top year because it didn't happen in 2025, folks.
Look at the chart. Like this looks like a very healthy chart. Climbing the stairs all the way up, doing the same thing. If you want to look at like 20% plus drawdowns, I think we've got like, how many? There's like one here. This one there's 25%. This was a big one here. This was 33% here. You had another one. This was 32%. We're only at, I think 25-ish, 27% here now. So we're not even at 30%. And we remember when we had this happen here, people said, "Oh, double top, it's over."
Yeah.
Right, beginning of 25.
That was the tariff sell-off, right?
And then we had the tariff sell-off. That was over, right? And then we had here, same thing, right here, double top. We broke a new all-time high again, 123, and then we hit 125, all double top. Well, then we went up to a new all-time high, 126, almost 127, and now we're back down, with another correction here.
When you look at that chart, we just haven't had the parabolic run that we've seen in every other Bitcoin bull market. You haven't had the banana zone that you've seen in every other crypto market. You even have parabolas on gold, and gold is a $30 trillion asset. So it would be very odd for all of these indicators not to hit, QE to be starting, QT to be ending, not having a parabola on Bitcoin, but you had one on gold 70 days ago. That would be very odd, and that is very possible. And like we said, if you guys sold at the run to 123 or 125 or 127, and now you're still just sitting in cash that whole time and didn't FOMO back in, you've been right so far. But hopefully, you don't think that this is the end of the market cycle, because I don't believe it will, and you buy back before it gets out of hand to the upside once again. Again, we could be wrong, but it just seems like there's so many macros and so much history repeating itself that is showing you that the cycle isn't truly over. And like we've said a bunch of times, this is the battle right now. There's believers that are still buying or trying to deploy capital. There's institutions who are scooping it up, but there is OGs, whales, and those 4-year cycle believers who are selling. And there's a battle going on right now. And it looks like, from the outside looking in, that the 4-year cyclists are winning so far. But Thomas Lee also did say that during that liquidation crisis, that Wintermute, Binance, some of the biggest players in the space, might be trying to fill some holes in their books, meaning they lost some funds. So this downward pressure is for them having to sell some assets to fill holes in their books so they don't go insolvent like FTX and some others, and that would make a lot of sense. Now, he didn't provide proof or validation to that, but that's Thomas Lee with some of the biggest quants in the space who are all paid 6 figures or more, so I don't think he would just be saying that live on TV with some kind of back-end information on that as well.
Yeah, some of the rumors about centralized exchanges being insolvent are silly. Centralized exchanges made a lot of money. Maybe not Binance particularly. They, depending on where their money was, if they were doing market making themselves, whatever. but they make most of their money on derivatives, on perps, and liquidation events like this. They get a lot of money. We work closely with a lot of exchanges and talked to some of the teams recently, and some of the exchanges that rumors have been circulating that they're insolvent. We know the teams directly, and they're like, no, we never have to make another dollar again. Like they made a lot of money.
Well, that always happens, right? Like when the market is weak, when you're seeing price perform as it has been, that's when the FUD comes out. I saw FUD last week that Michael Saylor was going to be liquidated. And of course, if you dig into his structure and how strategy operates, they can't get liquidated because it's like a rolling debt or something like that. I don't exactly know the structure or how that works, but they literally can't get liquidated unless the price hits like some astronomically low figure. It's not like, oh, they get liquidated at 80,000 like you're seeing these rumors. So you see the rumors about Michael Saylor, you see the rumors about the sex, you see the rumors about this, that, the other thing. That is what happens every single time price is down. The fudders come out. And whether those two things are directly correlated or whether it's just happenstance, I'll leave that for you to decide. But look, it's a lot of noise, guys. A lot of this is just noise. If you understand who's selling right now, if you understand that it's guys who bought in 2013 and held for 15 whatever years, 12 years, however long it's been, you know how many of these moments those guys lived through? Like 500. And they decided to hold and now they're billionaires. So again, do with the information you want. You guys want to sell out, you think it's going lower, buy back in later, you go ahead and do that. I'm hodling on. I continue to believe in this asset class. I believe the Fed is going to step in and save our butts because they sort of have to here. We got some good data coming out. We got November job numbers coming out, or it'll be October job numbers, I believe, this week. We actually had a study as well come out just yesterday from the San Francisco Fed, looking back 150 years at tariff data. Turns out we were right. A lot of the crypto analysts were right, and the Fed governors were wrong. Tariffs are actually disinflationary. They actually hurt growth. They're not inflationary. That's what the data proves. So again, all these Fed heads saying, "Oh, inflation's going to be caused by tariffs, and that's why we got to keep rates high." They're wrong. They continue to be wrong. Meanwhile, the labor market's hurting. Meanwhile, you continue to have layoffs each and every week from big companies. Verizon just announced $15,000 person layoff. Just the other day. That on top of what we had the week before, 150,000 from another company. So I can go on and on about the labor market looking weak. The Fed is going to cut rates, guys, and it's going to surprise the market. And I think we're going to move higher starting around that time.
It makes you wonder how all these government and non-government employees who are all making $100,000, $200,000, $300,000 to be the bigwig heads, how they all got it wrong. Because literally for the past 6-8 months, I had a pinned video talking about previous times that the United States had tariffs and what the impacts on the markets and inflation was. And it took me about an hour and a half of research and 30 minutes to record a video, and it was correct. And I got paid $0 for that, or maybe $5 in ad revenue. So it makes you wonder, like, how are they so wrong? Is there a reason they're so wrong? Because now, 8 months later, it's all coming to fruition, but it took some random Joe Schmo 2 hours to come to the conclusion that they're coming to today.
Well, a lot of these economists, a lot of these economists are political shills. Like, I mean, there's a dozen of them out there that are posting stuff that anybody with an 8th grade economics, who's read an 8th grade level economics book, understands that people like Robert Reich and Paul Krugman are morons and they're just political shills. The problem is there's many people that ascribe to the same school of economics or a very similar one that these guys do, and yeah, they're happy to jump on the bandwagon with everybody else and make these wild predictions off their mathematical models, which have no basis in reality. So it, unfortunately, it's one of those issues of the intellectual system that we're in sometimes.
Well, I mean, as to the tariffs causing inflation, the one thing I will say is, on its face, it may appear logical that tariffs would cause a temporary price increase on goods that are being imported. But it didn't really happen this time because, first of all, the stated tariffs didn't end up being, the initial, whatever he announced on April, whatever day that was, you get 100% tariff, you get 200%. That was all fugazi. It ended up being negotiated way down to something like, it actually turned out to be 10%, 15%, whatever it was for most of these countries. Then you have the manufacturers eating a lot of that, maybe half. Then the importer eats some of it. And then maybe the consumer gets like a 2% on certain goods. This is not the whole economy, guys. This is not the entire inflation reading. Most of the inflation data actually comes from housing. And one thing that had been inflating up housing was the fact that there were so many immigrants came in this country. Trump's kicking them out, disincentivizing further immigration. So you would expect to see easing on the housing prices. So I don't know. The whole thing was ridiculous. You could say how on its face it might appear, but again, these guys should know this stuff. To your point, like they're supposed to be smart, they're supposed to be trained. This isn't that complicated. So in any event, I think we're going to get the rate cut. I think the Fed is going to come in and save us. We know they're ending the QT, so that should help the markets breathe a little bit because not so many treasuries and mortgage-backed securities getting dumped into the market every day. They're going to stop that, cut the rate on the 10th, and hopefully, the big hope now is the QE. When do they start actually putting money back in the economy and back into the financial markets to buoy things even further? That's what caused every other run on altcoins. That's what caused every other parabolic move that we saw in the past. It wasn't just, oh, well, the date, it's parabola day, the date's here. Like, no, it was because the Fed actually put money in the economy. So they got to do that again. And if they do that again, everyone who held will be happy, everyone who sold will be sad. And I think it is inevitable they will do it. It's just a matter of when.
Well, the one sector that doesn't need QE, the one bright spot to anyone's portfolio, was Zcash this weekend, going to yet another high for the move. Now, there is a bearish divergence here off of this move that was made this weekend, so we'll see what happens. But the strength continues as Arthur Hayes and other Bitcoin whales continue to sell Bitcoin to buy Zcash, allegedly, based off their talking points that they're doing in videos and in their Twitters. Somebody's definitely buying. I thought I was a genius for getting this 400% gainer, and it just keeps ripping and roaring. But one that we have talked about was Zen, and yesterday I said, hey, everybody's talking privacy, but nothing's moving but Zcash. Well, I woke up, and I guess Horizon did not like that tweet because it is rage pumping today. Up 30%, back off the retested that breakout level, and back up to 1676. You can see the green dots here. These are where the indicators gave buys, and then we even did a live show saying, hey, this looks like a consolidation. I'd probably get long here at a $9.44. So what do you think of the privacy sector now, Crypto Amaru? Do you think there's more legs to this? And then I know Nate and myself have a news article that might lead to, yes, there might be some more legs to the privacy sector narrative, as one of the big boys looks like they're about to jump in head first.
No, I think there's more legs. I think it's a momentum trade. I don't think all of a sudden people in crypto genuinely start to care about privacy. I know it's a nice story we like to tell ourselves, but why didn't Zcash and all these other perform great over the past 8 years? If you love privacy so much, why wasn't it the best performing sector for, 8 or 9 years? And even back going into 2017, these weren't the best performing assets. They were there, people talked about them, but they weren't the best performers. People care about price go up. And as it happens for Zcash and the privacy is price go up right now. I'm not sitting here saying that privacy is not an important thing. I'm not saying people don't care about it. I just think the reason it's pumping is not because all of a sudden everyone's like, oh, it turns out I love privacy now, and no, it's because price go up. So good for them. I'm happy to see the Winklevoss getting in. I'm happy to see, these privacy coins doing well. I think it's better than what we had in meme season. I much prefer to see this than like Pump Fun, all stuff doing well. And obviously, Ethereum now pivoting or leaning into privacy is also great. So very happy. Everyone here got in. Pissed I missed the run. I think it's going to keep going. I just don't think all of a sudden people actually genuinely care about privacy. They care about price go.
Well, whether it's a genuine, trend founded in legitimate desire for privacy, and or whether it's just caught a narrative bid, this is going to certainly add fuel to that fire. Vitalik has actually been talking about this for a while. He wrote a paper back. I think we covered it here back in maybe it was August or September. But doubling down, they had an actual privacy summit at one of the conferences here recently, just last week. Vitalik talking. It's actually really good. I watched the whole thing. It's only 8 minutes long, but he covers why privacy is fundamental to our societies as a whole. Many of the things we consider human rights, many of the things that we consider constitutional rights in the U.S., core principles of freedom are all based in privacy in some fashion or another, whether that's privacy of your data, privacy financially, et cetera, et cetera. And so he really pushes kind of the individual, personal privacy side of it. But he also talks about what we have talked about a few times on this show is the underlying principle of scaling or of security at scale, and how security, or excuse me, how privacy is a fundamental part of that as well. So core to the tech, core to our freedoms, core to human rights. He really kind of covers it all. He doesn't go too deep, doesn't dive super techy. Kind of at the end, he does a little bit when he's talking about, he mentioned Zcash, and Zcash is actually built off of a tech that they originally launched back in the day, and how they've made improvements to it, and how from a architectural perspective, security is so important, to be able to scale and not have hacks and exploits. But he doesn't get too technical overall. So even a guy, a non-technical bum like myself can understand and appreciate it. But highly encourage you to go watch this. Again, only 8 minutes long, and well worth it. But definitely going to continue to fuel the privacy trend. I'm not saying go top blast some of these tokens, but maybe next time there's some dips on this, it might be worth buying into. I do think it runs more. Does it continue to be this parabolic? I think when the rest of the market comes back, it definitely slows down. I think it's really benefiting from the fact that everything else is down, and this is the only thing catching a bid at the moment. But it has been a trend in multiple cycles. It is a legitimate trend for more than one reason. But yeah, definitely a little inflated.
Well, thanks for so eloquently describing all the tech talk that Vitalik had. But it's not about the tech talk. Look at Vitalik here. This is the most Chad we've seen Vitalik ever on the stage. He's got the shades on. He came out with a little swagger. He's not wearing any boxers. He's hanging dong in that video. Vitalik is setting this thing to 10,000, not because of privacy, but because he's finally turning into a Chad. Remember, the last time that we saw a big run at Ethereum, everything was selling off because they were so woke and they're donating this, donating that. As soon as they shit-canned one of the woke girls there and, demoted her, we went from $1,500 to $4,800 ETH, and now we got ETH leader here, Chad Vitalik. We're about to rip again above 10,000. Who cares about the tech? It's all about Vitalik here, and I like this look better than him dancing with unicorns and cupcakes.
No, I was just saying, I think he's watching Crypto Paradise. He's got the shades. He's got like a Hawaiian shirt on. He's feeling good. He's vibing, man. He's bullish. But on a more serious note, I do completely agree with Nate and Vitalik on this, that privacy actually does matter for price, right? That's what everyone's wondering who's watching the show. Like, okay, guys, cool talk about privacy. When price go up? Well, I'll tell you what. When the institutions feel like their transactions are going to be shielded, when they feel like the risk of exploits are much lower across their holdings and other investors or DeFi users on Ethereum, well, then they will feel much more comfortable deploying their billions and billions of capital into the chain. So these things are absolutely related. Privacy and a new framework on Ethereum focus on privacy. This should help incentivize the big money Wall Street cats to get into the asset. So it is all connected. It is related. It is bullish. And I think long term we will eventually show up in the price. Before we get to the next topic, I do just want to give a shout out to everyone who's watching the show. Martin, Hexbull, good morning, Jay. Good morning, everyone. Remember to like, share, and subscribe. We have a new viewer here. Circle the wagons. What's going on, bud? Am I trying to shake you out? Yeah, we've been talking about that. We've been talking about Binance, Wintermute, etc. I mean, they make money by shaking people out. This is a zero-sum game, this crypto space. There's a winner and loser on every trade. And so when there's mass liquidations like we had on October 10th, or just a few days ago, when there's mass volatility, a lot of volatility up and down, they're making money from everyone who does not have conviction and is over leveraged or just selling at the lows, whatever. So this is absolutely a zero-sum market. They are trying to shake you out. I don't know if it's a mass conspiracy across the entire crypto space, all the whales coordinating at once. But I mean, Binance and Wintermute have a pretty significant impact on the overall market, and they're absolutely trying to take your bags. So, oh yeah, I want to also give a shout out to Martin. Talk about this topic for 1 minute too. I don't want to ignore you guys. Too many tokens. I've seen this. Okay, so we don't have a blow off top because we have too many tokens, right? And I've seen this contention before, and I don't know how much credence I really give it. I've always felt like we've had too many tokens, relative to the size of the total liquidity. That's what you have to look at. It's like too many tokens relative to the size of the total liquidity in the market. And even in the prior blow-off top periods, there were a lot of tokens. Most were dog shit. Most didn't do well. But you had some outperformance, and then if you have outperformance for a period of a few months, everyone feels like they've made it, and they usually did make some money if they were in the markets previously. So I don't know. I don't fully buy this. Obviously, Pump Fund, look, you can launch a new token every day, but most of those don't bond. Most of those don't go anywhere. I don't know how much liquidity that's really sucking out. It'll be interesting to see once we have true, Fed easing and quantitative easing and money being pushed in the economy, money being pushed in the markets. Do we have a blow up top? I think we get a period where most alts are outperforming Bitcoin. But man, it feels like a distant future, doesn't it, boys?
Yeah, I mean, there's definitely too many shiny objects out there for sure, which dampens the results during parabolic runs, which means instead of 1000x, maybe you get a 500, or instead of 100x, maybe you get a 25x. But that doesn't. Too many tokens isn't why there isn't a parabola at all, because when you're talking about the parabolic move in crypto, like Crypto Amaru said, you're looking at the total market capitalization, and so far we haven't even broken 4 trillion, or maybe we did for a flash in the pan. Meanwhile, gold had a parabolic move above $30 trillion. That's what I'm looking at, the parabolic move for crypto economy, not just for individual tokens. But yes, shiny tokens could dampen the end result. Last cycle we were hitting 100x's like it was nothing, and maybe this time they're 25 or 50x's because there is so many other shining objects. But again, we have not had a parabolic move on really anything here, not even Bitcoin itself. If you zoom out and look at it compared to its previous cycles, this looks like we're in like phase 1 approaching phase 2 of the 4-phase parabolic move, if you want to look up banana zone and parabolic runs on assets. So that's why I'm still holding out hope. It doesn't even look like Bitcoin itself has had the full 4 phases yet, and definitely doesn't look parabolic if you zoom out a little bit.
Yeah, I agree. I don't really buy into the too many tokens narrative. It definitely can have an effect on spreading out the pumps a bit, but I think the memes were a good kind of case in point for that. Like there wasn't really a whole lot of new liquidity coming in, and we saw lots of coins pump to tens of millions, 50s of millions, billions of dollars. It wasn't in our traditional alts; it was in memes, which sucks. I think it's more about attention. We haven't really gotten the attention cycle outside of the period where we had memes going crazy. We just haven't had the attention cycle that brings those pumps to alts. Pre-sales have been dead for 2 years. It hasn't been the IDO market hasn't been there, which has driven a lot of the early stage stuff in alts over the last few cycles. So I think it's a combination of things. Definitely having so many coins can spread it out, but I think when we eventually do get to an alt season, it's going to be like it has in the past. There's going to be certain narratives that run, and there's going to be, the top few coins in that narrative that do really, really well, and there'll be a few others outside of that, and there'll be a million copycats that don't really do a whole lot of anything. But again, I think we got a little taste of that with memes when they went, when they started popping off. That was definitely alt season-esque. They rotated very quickly between new memes, which I think is different. Kind of, case in point with the, too many tokens. That was what's the next thing that's going to get us the 100x? Because I missed the last one. I can't jump in this one. I got to get to the next one, and it kind of compounded like that. But there was definitely opportunities. There was tons of 100x's, 1000x's, 10,000x's with the meme stuff. Just I think a lot of us that are more used to the traditional degen stuff were a little late to the game over there, and either didn't fully get ingratiated to where we really knew the insides of the system when it comes to memes, whereas we're much more comfortable in the traditional alt markets. So, but at the end of the day, I mean, even here at Crypto Paradise, we had what? We had a 50x, we had multiple 5x's, we had a couple 10x's, we had a 20, a 30, and a 40x. So we still, those are some pretty decent, if short-lived, runs on some of those meme coins back in a year ago. But yeah, it's a different dynamic for sure. But I don't think we can completely blame it on.
That feels like 10 years ago, doesn't it?
No shit.
Yeah,
we got Rima here saying, well, it's a bit debatable, but as a whole, alts are already outperforming Bitcoin. And I guess if you look at this Bitcoin dominance, yes, this is based primarily on the run that Ethereum, BNB, and Solana had against Bitcoin, taking Bitcoin dominance from 65% to now 59%. But what's interesting is if you zoom out, let's go out to a weekly here. And this is Bitcoin dominance over its history. This is kind of when Ethereum was created and everything else. In the 2017 parabolic run, Bitcoin dominance went as low as 35%. Last cycle, for a very long time during the parabolic alt run and really at all the lows of Bitcoin, we were at 39%. This is a higher low. So even if you're in the camp that, hey, Bitcoin's going to keep outperforming everything else, even though there's a million shiny objects and we need another higher low, I mean, where's the higher low? 44%, 49% maybe? We're still at 59%, which means there needs to be a massive alt season, a massive outperformance in Ethereum and other altcoins to get this Bitcoin dominance chart to go down to anywhere near those levels.
Yeah, it doesn't feel like ultimate outperforming Bitcoin, does it? I mean, I know we've had some bright areas, like obviously Zcash, we talked about that. BNB had its moment in the sun. Solana went on a great run. ETH went on a great run for periods. But it's been the Bitcoin cycle thus far, and I just feel like going and looking at the kind of the phases of the market, you could sort of go back and argue that, man, we might even still be in phase 1 or phase 0 if our contention's correct anyway. Like, this isn't the end of the bull run. This is actually going to be coming to 2026, the start of the start of at least like the really good phase of the bull run. Oh, look, could we be wrong? Sure, but with the Fed easing coming, the rate cuts, new commissioner coming in, Powell is going to be replaced in May. He's going to his replacement will be announced sooner than that. It's probably going to be a dove. I'm sure it will be a dove. I know Trump is trying to juice this economy. I mean, $2,000 stimulus checks going out from the tariff funds that have come in. We have the midterms coming this time next year. Do you really think he's going to sit idly by and not try to make these markets and make the economy look and feel better? Will he be successful? That's anyone's guess. But my money's betting on Trump. My money's betting on they will end up cutting the rates, juicing up the markets just in time for the midterms next year, or hopefully well before that. But this doesn't feel like the end of the bull run. This feels very, very different than that.
Yeah, this would be the lamest altcoin season ever. This little drop down right here is when ETH ran, Sol ran, BNB ran, and you had a couple outliers. That'd be quite the lame alt run when you look at the bigger picture here of what we've seen. 2017 cycle, 2021 cycle, and all of this opportunity here for alts, and then this was what you got this cycle.
You will get what you get, and you don't get upset. That's what my kids tell me. That's what they tell them at the school. So I guess maybe we should go back, put our kindergarten hats on, and you get what you get. You don't get upset, people. Look, greed kills you. Greed will kill you. So look, be patient, y'all. Just be patient. I don't think this cycle's done. It doesn't make sense. When was the last time we saw a cycle end at max fear? Usually it ends when it's gotten super greedy, and then the Fed says, okay, I got to pull the rug on this crazy inflation we just caused. The markets are way too hot. We got to start raising the rates because they've been too low. We just went through 2 years of tightening, and this is the end. This is kind of the cratering of sentiment and fear and prices and assets. Everything's feeling the heat from the Fed, and I think they got no choice but to pump things up again here soon with liquidity and easing. So I know Raoul Paul's on my tip, man. I follow this guy religiously. He's kind of my North Star, actually, when it comes to a lot of my takes, because he's been on the 5-year cycle. He's been on the 5-year business cycle. He's been on, it's all liquidity. It's all macros. It's not dates. It's not astrology. It's not whatever else people. It's not lines and charts. It's just where's the money and where's it flowing and is it ready to go into risk assets? And we haven't quite gotten there yet.
Yeah, he talks in here about that. Bitcoin isn't lagging; it's literally tracking the ISM. A lot of people have been talking about the Bitcoin cycle, what we've called the halving cycle, or I guess contributed to that the halving cycle, creating this 4-year cycle for Bitcoin and the markets is actually the ISM, the business cycle here. Is in 2021 to 2022, we pushed the average debt maturity from 4 to 5 years, which is what's helping create this stretched out, elongated cycle going into 5 years, which again will put the peak liquidity into 2026, with the ISM topping out after that. So he's calling for textbook 5 years versus textbook 4 years, which would put us topping out sometime around now or towards the end of the year next year. Hey guys, we said no matter what happens, it's not going to be easy. We've been saying that for a while. I said they're never going to give us just up only. They're gonna shake you and break you any way they can. So If we get this whole another year of the bull run, I think it's all going to be great. But they're not going to just give it to us. We're going to have to suffer through some more stuff to get to the gold yet. So be prepared. Analyze your risk. Everybody's got different risk tolerance. If you think it's worth it, if you got a 5-year horizon, what do you care? Keep DCAing. You're fine. Maybe we'll have a blow off top here next year, and it'll all be good. And if we don't, you don't care. You're gonna keep DCAing and waiting for the next cycle, right? So, if that's your perspective, great. If not, if you're gonna trade it, figure out what your line in the sand is. Figure out where you're calling it officially a bear market, and take your precautions accordingly. We're gonna remain uber bullish.
Here's the ISM chart that he's talking about. If you guys want to pull it up on your own trading view, this is how you can look it up. USB COI, or here it is. And I even marked this chart up already because I've been looking at this to give me some warnings. It's like 62, aimed at 70. If the technometer gets up to those levels, maybe we'll look for some froth taking in the crypto markets. Of course, we haven't gotten there yet. And if you look where we are up here, we're at 48. And if you do zoom in, Bitcoin has kind of followed it. New high, Bitcoin do a new high, and we had a sell-off. Look where we're at. But if you look at where these previous peaks were, up here, January and February 2021, well, that was the end of last cycle. And up here, end of 2017 and early 2018. Well, that was the top for Bitcoin around December of 2017, January 2018, and you had that alt season for Q1 of 2018. So, historically, this is correct. The ISM is a proxy of liquidity and risk on nature, and it has marked the tops on the past 2 Bitcoin cycles. And I'm sure if you go back here, look, this top up here, 2013. If we look at the dates that we were talking about with the map of Bitcoin results and performance, well, that was the top for Bitcoin as well. So end of 2013, beginning of 2014. So let's see if history wants to repeat itself. It has happened the last 3 cycles. And what's interesting here is this ISM has actually expanded each cycle, going to new highs, which means if it continued to expand this cycle with the move from a 4-year business cycle to a 5-year, that means you're going to go above even the 65 print, which is how you do get the biggest and baddest bull market in Bitcoin history, and maybe Ethereum and some altcoins will want to follow along. So we'll see if it wants to expand 4 cycles in a row. Very possible, because I'll tell you what, the monetary supply continues to grow. The numbers continue to get bigger on your screen when it comes to US dollars, Japanese, the yuan, and everything else going on globally when it comes to fiat currencies. So we'll see how things play out. But yeah, if you're looking at ISM, we are literally at what were the lows of the previous cycles.
I mean, a couple points. So, one, you have to ask yourself, what do you think is more reasonable? What story do you believe in more? The Bitcoin price is determined by dates, solely based on dates, or it's actually based on underlying economic performance and the underlying economy, aka the ISM here. So, that's a rhetorical question. I know what I believe in. The second point I want to make here, I just sort of had an epiphany. This moment in time feels like one of the most critical moments in Bitcoin's history. Because if we can get through this next, few weeks, month, without Bitcoin absolutely breaking down and dumping, another 30% lower, if we can survive this and we start to grind up and then we start to march back towards all-time highs by end of this year, early next, then unequivocally, we will know, and the entire market will know, that the 4-year cycle is actually dead. And when we unequivocally know that the 4-year cycle is dead, there's going to be a lot of people on the sidelines. They'll have stables. They won't have forgotten about Bitcoin. They'll have money, and they will have no choice but to deploy again. Because if the 4-year cycle's done, prices are going higher, right? So this is this moment in time. I mean, we're really here. We're here, guys. We're at this moment because, look, if we're wrong, then you would expect the 30%, another 40% correction. We're in a multi-year bear market now. 4-year cycle, guys will be laughing at us, and we'll be, hanging our heads in defeat. But I don't think the story's playing out that way, guys. So we got a couple more weeks here in this super pivotal moment, but we're going to know sooner rather than later that the 4-year cycle is in fact dead, and when that happens, you better believe that a lot of capital is flowing right back into this asset class.
Place your
That's one of my better takes.
That was a good take.
Oh, better one.
We shall see. Nate, it looked like you're going to say something, but nothing to say.
I was trying to pull up an article here, and give me 1 minute.
Isn't one to work on.
Not one to come up. Yeah.
Nasdaq was green, flipped red, and just flipped green again. That's kind of the most risk-on stock indice that we have here in the United States, so that's good for Bitcoin and Ethereum. I did see when it flipped red that Bitcoin was going towards the lows for a day again. Let's see how Bitcoin's reacting here. $94,200. Nothing exciting as we were at 95,000 today, but it is a couple $100 off the low. We'll see what happens here.
Yeah, it feels like we're just going to consolidate until we get some more information around data, Fed-related data. Let's call it that. Because everyone, I mean, we're all just waiting with bated breath. Is the Fed going to cut rates in December? What is Powell going to say in that meeting? Is he going to be dovish or hawkish? Or are they going to sort of suggest that QE may be around the corner? Or are they just going to say, oh, we're holding off and, QT and that's it. Well, so we don't need QE yet. And then, So everyone's just and that affects the stock market too. That affects all these tech companies. They're all ultra sensitive to liquidity and rates, right? In the business cycle, et cetera, stuff that we talk about. So that's why the stock market's trepidatious. That's why crypto's we're just, chilling. It seems like the past 3-4 days here in this 94, 93 to 95 range. I don't see us breaking out of it one way or another until we get more signal from the data and then the Fed. What are they going to do? So I don't expect anything crazy over these next few weeks, I would say, or next few days until we get some more data. But fingers crossed, Powell, do the right thing, bro. It's time to save us. It's time to save our butts. You've wrecked us. You've wrecked the economy. You've killed jobs. You've fucked over the housing market. You fucked over the auto industry. It's time to stop. It's time to unfuck us. Please, Powell, please.
Well, it seems like these odds might be changing this week. Not sure which way they're going to change. We see no change on Polymarket, up to 52% this week. But there's a few things on the calendar here. This one is massive. Of all these on here, I think the NVIDIA earnings, if those come out bad, it could be the start of that AI bubble pop that we've been talking about the last few weeks, the rumored issues in the AI market. So we'll see what happens with NVIDIA. The
Earnings
other one
are made up. Earnings are all made up. And this is probably, if you're a Wall Street guy, you probably don't believe what I'm about to say. But earnings, they're always in profits, guys. It's never like, oh shit, Nvidia didn't make any money. They lost $5 billion this quarter. No, it's like they only made $300 billion in profits, and we were expecting $350 billion, and so now we're mad. Market's mad. The expectations, it's all made up. It's all made. I know maybe I'm wrong about this, but I'm pretty sure the whole thing's fucking fugazi. And so where are the expectations? Where are they coming? It's not like, oh shit, guys, Nvidia's going under. They're declaring bankruptcy next week. Like, they're a bad company now. Like, no, they're still printing money. They're still making an enormous sum of money, having built out the shovels and the pickaxes for the AI gold rush here. So hopefully the analysts don't fuck us over with some unrealistic expectations. Analysts, if you're watching, let's keep these expectations low so they surely beat them, and then we can pump again.
Expectations are
Nick on my take about the expectations all being fugazi.
I don't like, you are right that you can still make a lot of money, but miss expectations in the market could tell you off. The expectations are quite a bit higher than last quarter. Last quarter, they were about 20% lower. Of course, they beat expectations the past, I don't even know. It's been every quarter since November of 2022. They beat the expectations every quarter, but they did raise expectations in the last 3 months by another 20% on both earnings and reported revenue. So that is quite a hurdle for NVIDIA to have to add another 20% to their $46 billion in revenue they had last quarter.
Are the expectations the same this time around? Or
no, 20% higher. 20% higher from both. That's what I was saying. They're 20% higher than they were just 3 months ago.
Can't you analysts be happy with 300 billion profits? No, it had to be 400. They should have made 400. Why didn't they make 400 billion? Fucking bums. Jensen Huang.
Yeah, it's all narrative based. Like a lot with crypto as well. It's the narrative based, and there's already a lot of FUD around NVIDIA and some of these other big AI companies. So it wouldn't take missing the earnings report by much to kick that fear sentiment into full gear. Again, like you mentioned, these numbers can be fake, but it's all about perception in the market. It's all about what people believe. There's already been some fear stoked, so that's kind of my concern is if they do miss with all the FUD that's already out there, what does that do to basically the backbone of the stock market right now?
Oh, look, could the stock market see further correction in the near term? Sure, it could, but I don't know. I'm a heavily invested in the stock market. I believe in the Magnificent Seven to continue to print money because Google ain't stopping. Apple, Amazon. I mean, they're all excellent, incredible, historically profitable businesses. Nvidia, of course, being the leader among some at this moment in time. So I just, if you're long in the stock, you should always be long term on the stock market. Crypto, okay, I get it. We're highly volatile. I know some of you guys don't believe in Bitcoin, and so you're just in it for a quick scalp or whatever. You're in, you're out. But the stock market, don't treat the stock market like that. So I don't care what happens next week with Nvidia. Don't panic sell a dip using your 401k or some shit like that. Don't go all out of your mind. The stock market goes up, down, but long-term time horizon, it's always up 8%, 10% or more a year. I don't expect that trend to change, certainly not with Fed intervention coming here soon too. So whatever happens with Nvidia, I'm going to hold my 401k.
Well, as far as the rate cut bets go, I think by this week we'll have some good additional info. As you mentioned, we need more info to try to start speculating on what the Fed and JP are going to do. But September jobs report will be important, as well as the PMI and consumer sentiment and inflation expectations. Those are all on Friday. So by the end of this week, I'm sure we will have a full new set of speculations to bring to you from the powers that be. What's JP going to do? We'll be keeping a tight eye on Polymarket to see how those numbers shift over the next couple days. So expect some volatility there if you're a Polymarket gambler.
You know what's so interesting about the Fed and expectations for this month, and we see 52%, I think now saying it's basically a wash, saying okay, rate cut or not. It's not based on the data that they're saying this. It's actually based on the absence of data. Our markets are betting more in it because the government was shut down. We didn't get the data. We're not apparently going to get, I believe it's the October data for certain things. And so the conclusion, I guess, from some market participants, well, the absence of data will mean that they feel they're not comfortable enough to do one way or another, so they're just going to hold pat. But first of all, that would not be the right move at all. I mean, again, it's all balance of risks what the Fed does, inflation versus labor market. That's so you have to look at both those. But the balance of risk is heavily favoring, labor market intervention because that's been trending down. And this phantom inflation that they keep, expecting to happen because of tariffs hasn't happened, will not happen, is not going to happen. Put that story to bed, guys. Pull the wool out from over your eyes. The inflation is not jumping up miraculously just because tiny, tariffs that happen on a few countries. Get your head out of your ass. The labor market's in trouble. So the absence of data, to me, that's a red herring. Don't play into that. Look at the labor market. That's really in need of assistance right now. And the Fed should know this, and especially too because the rate cuts doesn't mean that, you cut the rates, businesses are rejoicing and hiring the next day. No, these things take a lot of time to basically rates flow into the economy. So we may be looking at like a 6-month lag before companies feel confident again to spend money and hire workers. This Fed, they better do the right thing. They better do the right thing. I think they will, and I think we're going to be pleasantly surprised come December 10th.
Well, that kind of pushes more the narrative. If we believe that the elections, which historically would say, regardless of who's in the office, they're gonna try to make the markets better before the elections. Because of that lag you mentioned, it does take time for people to start hiring after rate cuts and QE and stuff. They can't wait till next summer to start doing this because the numbers won't catch up on the jobs and other things in time for the elections. If people don't have jobs, they're going to be pissed. So they're going to need to start doing this stuff relatively in the near future in Q1 if they want to see the downstream impact in time for it to have a meaningful difference, to make a meaningful difference in the elections in November. So it's not something they have the luxury of waiting 8 more months to start doing. So if they're, unless we're completely wrong and the Trump administration is going to let the markets collapse during an election year, which can't fathom in what world they do that, these things are going to have to start happening quick.
Yeah, remember, the only downturn in the stock market that we've seen under Trump's regime is the tariff fear by those who doubted him and doubted tariffs, which they ended up being wrong, and Trump was right the whole time. So, again, that wasn't Trump sending the markets lower for any particular reason. That was just people not liking his narrative. And I saw this news article that you're pulled up here. Japan are considering $110 billion of new stimulus package to its country and its civilians. And that would be massive. That's at the same time that Trump is talking about a $2,000 stimulus package for the citizens here at the United States. Now they're saying it might not be cash for everybody. It might be reduced taxes for other people. It might be no taxes on tips for other people. In whatever case, it's still stimulus if it's hitting your pocketbook and saving you $2,000 a year for this stimulus here in the United States. And there's other countries doing this as well. And normally, when you have stimulus, when you have rate cuts, when you have QT ending and QE, that money gets injected somewhere. And it isn't to buy rice and chicken. It's to buy speculative assets and investment classes globally, and historically that's been Bitcoin and Ethereum have been massive beneficiaries of that type of QE.
Yeah, the EBT beneficiaries already have enough rice and chicken in their pantries, so if you get $2,000 bums, inject it in the market for our sake. We're hurting. We're hurt. Us asset owners are hurting, guys. Our assets are down. Can you pump our bags? I'm sick of this.
Yeah, I expect the sports books, the prediction markets, the hyperliquids, and the memes, and all the other degen plays to benefit greatly from whatever kind of stimulus check we get.
I was over leveraged. I was too heavy on memes. Can you bail me out, please, Powell? Can you bail me out, Trump? My own bad decisions. But yeah, I'm just kidding. Well, one thing I will say about this Japan, right? This is on top of China's stimulus. This is on top of the $2,000 tariff checks I believe will be going out here. They may need congressional approval. This is also on top of the savings that are going to flow to taxpayers in the form of rebates, refunds, next year because of the big beautiful bill. That's a story not a lot of people are talking about. I've seen it mentioned on a few shows, financial shows that I've watched, but it's not a big story. But there is going to be money flowing into taxpayers' pockets because of the big beautiful bill as well. And so that's stimulative. There's enough coming on the horizon. I will also mention the Comprehensive Market Structure Bill, the Clarity Act, and that should incentivize and sort of make the institutions a lot more comfortable coming to this asset. So there's just a heck of a lot of positive catalysts coming. The market hasn't agreed yet, I think, on that they are coming. Partially because a lot of these, I mean, you see some of these Fed governors, or Fed commission, I forget the Fed people going out on the shows or going out and doing speeches, and man, they're throwing cold water on stuff left and right. I mean, it's just brutal. And that's one reason why we had a bit of a sell-off too last week, is some of the Fed people went out and they were saying a bunch of hawkish stuff. This, that, the other thing about inflation, and we didn't get the data, and I'm not comfortable cutting rate, that kind of talk. And it's like, fucking hell, guys.
Yeah, what's interesting about that too is the people who are talking hawkish on inflation. Trueflation data doesn't agree with you. The data that we've seen, like even Jerome Powell doesn't agree with you talking hawkish. But then also you look at Target came out and said this is going to be the cheapest Thanksgiving they've had in decades. Walmart said that their Thanksgiving meal is going to be 20% cheaper. Sam's is saying that products are going down when it comes to the snack section. And I'm telling you, I've bought the same exact items, for 3 or 3.5 years, once a week, buy the same shit every week, and they've gone down. Soda's gone down 4 or 5 cents. Crackers have gone down. The donuts have gone down a couple cents. So, normally I always say prices never go down. It's just the rate at which they go up slows down, and that's what we've been seeing under Trump versus Biden. But yeah, in fact, the first time in 3.5 years that I've actually seen a decrease in price for the vending machine items that I bought, and now you have Target saying the same thing, Amazon saying the same thing, Walmart saying the same thing. I mean, are you just going to be so politically biased that you're not going to believe the big dogs in the space, or you're not going to believe me, who's literally bought the same items every week for 3.5 years?
Well, the Fed has the studies now to back it up. I don't know if we have that story. Maybe Nate, you can try to find it. The San Francisco Fed study 150 years on inflation data. Maybe you can somehow find that real quick. But they have, and that's from like a branch of the Fed, or the Fed. It's the San Francisco Fed, right? And so they have the data now. From a historical standpoint, they have it from the present day standpoint. They got the anecdote from Nick. What more do these guys need? What more do these guys need? Here it is. SF Fed studies 100 years of U.S. tariffs find that they lead to lower inflation, weaker aggregate demand. Wow. It's kind of like what we were saying was correct all along, and the talking heads were just political biased assholes. But hopefully, man, what's it going to take for them to do the right thing? Like, what excuse are they going to give now, I wonder? Orange man bad. Orange man bad. Fuck the economy. I hate Republicans. I hate Trump. Let's fuck the economy so people vote Dem.
Yeah, that Powell has been dovish and did say QT was ending December 1st and has cut the rates twice. So, you know, so far, I know Powell isn't he's just the face head. He's not the ultimate vote. But so far, they have been going against their political biases, have done 2 cuts, did announce. That's what would be interesting. How do you announce that QT is going to end December 1st, and then you go into when you're supposed to cut rates again? You still haven't done a jumbo cut. Keep that in mind, guys. Every cut's been 0.25%. And not do a jumbo, not do a 0.25, but either hold pat or actually increase the interest rates, which is what some of the market's talking about now. I think there's like 59 million in volume on them actually increasing the rates this December. That would be pretty wild to see. I guess anything is possible, but it wouldn't make a lot of sense.
Well, here's my prediction for the upcoming Fed decision. You're going to get the 25 basis point, but you're going to have at least one asinine, Fed guy coming out and saying, we should have done no cut. And you're going to have Stephen Mirren, who's the Trump guy, coming out and saying we should do 50. That's what happened last meeting, by the way, guys. That's exactly the same thing that happened. And it feels like we're still, like, there's certain Fed guys that are, like, just stubbornly, like, inflation's a problem still. Fuck the job market. I'm worried about tariffs. You know, there's still 1 or 2 guys that are stuck in that mindset, and the rest of the people are like, all right, well, I guess we got to cut rates because the job market's looking shit. And Mirren's like, we got to cut rates more, guys. The job market's in much more worse shape than you think. So that's the push and the pull. My prediction, we'll see if it plays out. 25 base point cut, 2 dissents. One, Stephen Mirren will ask for the 50, and another asshole will have asked for 0, and it'll be the same story as last time.
Maybe they'll watch Crypto Paradise and surprise the entire market and do a 50 basis point jumbo cut right after stopping QT on December 1st and send us to the absolute fucking moon. And that's how we get 200,000 Bitcoin and $7,000 ETH by the end of 2025.
3 weeks. We're gonna pump 150% in 3 weeks.
Thomas Lee and Michael Saylor here. They're doing their part. I know Michael Saylor bought more Bitcoin, and I know Thomas Lee bought more Ethereum over the weekend.
Yeah, man. Smart money's loading still. As far as I can tell, I know there's a lot of whales selling, so let's not discount that. I mean, it's definitely, look, we are on this critical moment. I'll just go back to that earlier take. We're in a critical moment, folks. Within the next 2 to 4 weeks, right? By the end of the year, let's just call it that. We will know, without a shadow of a doubt, where the 4-year cycle is still intact. If we dump another 30%, then us bulls, we were wrong, will have been, quote, wrecked. I mean, at least my spot prices will be lower temporarily. The money on the screen will look lower, and I'll be sad for a couple weeks. But if we're right, all these sellers, man, I think they're going to start buying back in, or they'll fade. Their sell pressure's gone, and then we can go to Valhalla in 26. So it's going to be very interesting next few weeks. Absolutely critical. I know where I stand. I want to hear from you guys. I want to hear from the viewers. Do you guys think 4-year cycle is still intact? Do you think we're running into 2026 here? What are your thoughts, Bagito? Shout out to you, my friend. Thank you for joining up this stream. Who's buying? I mean, I'm not buying because I have no money to buy. that is the sad fact of being fully invested in the markets. Fully invested. My wife and I had a little bit of an argument this morning because we have a tax bill. These taxes here where I live are just insane, man. $4,000 a quarter on property taxes. That's $16,000 a year.
Jeez,
I do not live in a big house, guys. I do not live in a mansion. I live in a very modest home. In a crowded neighborhood. There's houses all. I don't have like 8 acres of land. I got like quarter acre, not even. I don't know. It's nothing. $16,000 a year. So I told her, look, I mean, we can sell some asset, I can sell some Ethereum or whatever to pay for this damn tax bill. But honey, if you got cash in your bank account, we better use that cash, because I'm believing in this 2026 pumping us to 10 grand, and we're gonna feel really dumb selling our Ethereum at $3,000 if in 2, 3, 4, 6 months it's at 10 grand. Use the cash for the taxes. Hodl the assets. I do not have any more money to spend on assets, sadly enough. How about you guys? Are you buying? Are you selling? Are you holding? Pump prediction by February. I hope before that, Mark, can we I mean, I am tired of being pre-rich. It's getting very tiresome being this pre-rich for this long. So I'm just looking to get rich. Hopefully before February. My God, that's only 3 months, man.
Yeah, I do think I'm a little more in his camp. I think it's gonna take a little longer. I mean, we can certainly start recovering before then, but I don't see any fireworks until Q1. The QE's really agreed there that that's the key, and I think that's going to take some time. Even if they announce it, we'll get a little pump, but until that money really starts to flow and they ramp it up, I mean, it's a lot. We're talking a lot of money, and they don't dump it all in at once. Like QE back in 2020 was something like it's like 800 billion a day or something silly like that, you know. So like that's going to take time to ramp up. They're not going to do that day one. So I think it'll take a little more time. I don't know if it'll take all the way till February, but I definitely think, you know, sometime in Q1. Maybe it'll be late Q1, but yeah, like we talked, they're running out of time. If they want QE, if they want the rate cuts to affect the job market, to start putting more money in people's pockets, to have a positive enough impact on their lives that they're going to go vote for Republicans in the primaries in November next year. They can't wait till summer to start doing it. They got to start in Q1, Q2 at the absolute latest.
You hear that, Powell? Don't wait. Do not wait.
I thought we'd be in wife changing mode right now, not wife losing mode. I know all three of us have wives, and they're believing in what we're saying and think we're crazy and cuckoo for these markets. And I thought we would have wife changing gains, not wife losing gains. That's what we're sitting on right now.
My wife wants to know when her Dogecoin's going to pump again.
Here's an interesting comment, actually, because I want to dig into this, right? This is very interesting. From Rema. Love you, Rema. A long time, surf guy in the Dow. I mean, whale, bullish, knows a lot about the market. 4-year cycle intact. He still thinks we're correct a lot less than the usual in the coming period. Maybe a sideways chop next near yield high alt season. So mini bear for continuation. So what I'm hearing you read there is almost like an oxymoron to me, because if the 4-year cycle is intact, then we're not just getting chopped. We're getting like a 60-70% correction, right? I mean, that would tell you that would be consistent with the other 4-year cycles. In November, Bitcoin tops or whatever it is, then we have like a mini alt season, then crash. That would be consistent with the other. So, what you just described is kind of like consolidation, then alt season later. I mean, that's not 4-year cycling. Well, that's something different. That's something different. So yeah, question is what you define as a 4-year cycle. If you were expecting to play out exactly as last time, then what you described is different. But yeah, look, we're all just speculating here, aren't we? We're all just sort of armchair psychologists, armchair analysts. That's what all anyone can do in these markets. For me, I just go back to, hey, time in the markets, not timing the markets. One of the tritest and truest statements you'll hear from guys who've done well in finance. So, I continue to hold. But yeah, we'll see how it all plays out, ladies and gents. We will see how it all plays out. One more comment from Bagito. I love the comments. Can only recover. Pumps are highly improbable. Be manipulated if it happens. Q1 will be good. Let's hope. Yeah, I mean, is this perhaps a sign that retail is giving up hope a bit here, and we're capitulated and we're just down in dumps and depressed? Pumps are improbable. We've just been beaten down and conditioned. Like, the market can't pump. We're in a bear market, whatever. And isn't that then the exact time that the market psychs us out and reverses and pumps like crazy? I don't know. Sometimes it keeps going down, but sometimes it reverses like crazy. So, again, we'll see. We'll see, guys. We shall see. Any final thoughts on today's live stream before I wrap it up?
And we're going to keep watching the markets. We'll keep an eye on the NASDAQ. We'll see what happens with NVIDIA here in a few days. And, of course, we're watching if Bitcoin and Ethereum are going to hold the lows that they made over the weekend, or I think it might have been even Friday of last week. If they did, remember, we've been talking about a while how you could be looking for 5 waves down, which would have taken out the previous low. Bitcoin and Ethereum have done those on Wix. So you could have 5 waves completed, and now you have at least an ABC relief rally. But again, there's no definitive thing here. We're still waiting and seeing. The entire market is waiting and seeing here, probably waiting on what the Fed's going to say about QT ending, what is going to go on with the interest rate cuts, and of course, NVIDIA will impact traditional stock market indices, which has impacted Bitcoin in the past.
It's really tough to predict the intraday movements because just the manipulation that we see, the fear, the bearishness from a lot of the market participants, the OGs selling the 4-year cyclists, there's just so much uncertainty and just craziness right now that, man, I think about Frontier Fund, for example. I know they just got out of a trade at a loss, but, it's one of those things where I don't know how you predict the day-to-day price movements right now with any degree of certainty. For those who've cracked that code, God bless you. But it's just this past few weeks here have felt very, let's just call it improbable and not easy to predict. So, yeah, we'll keep mining the markets. Near term, I think it's anyone's guess. But we got, 3 weeks until the 10th. We're going to get some signals before that as to which way the Fed may go based on data. So who knows? Maybe we get some more certainty coming back in the markets. But man, it has just been a brutal last few weeks with volatility manipulation.
Let's let Nate go to bed. What do you got, Nate?
Yeah, I'll say. We'll see you guys tomorrow.
Nate's tired, folks. Nate's tired. I might take a little nap. I was up late last night. I had to watch my Eagles. I got to watch till the final ticks. I mean, you can't abandon your team, not watch the entire game. So that's my version of touching grass, folks, watching my Eagles play. All right, ladies and gents, enough ramblings for today. Appreciate everyone tuning in. And until next time, guys, we will see you on the beach.